Okay. Good evening, everyone. On behalf of Chicago Booth Atlanta chapter, we welcome everyone. This event is organized by the Chicago Booth Atlanta chapter, supported by the Los Angeles chapter as well. We today have a diverse set of audience, from prospective and current students to alums working across various financial services, traders, bankers, and of course, just enthusiasts trying to understand the crypto market. My name is Vignesh, a Booth grad, and the moderator for this evening. I work in technology management and consulting areas, an ex-IBM and Infosys background, currently based in Atlanta. For today's session, I welcome our panelist, Nathan Clancy from FTX, Gordon Grant from Genesis Trading, and Deep Majumdar from Alpha Trend. So in this session, we plan to cover 3 or 4 broad categories of areas across digital assets, smart investing, the changing landscape, and regulations. So we plan to have like 10 to 15 minutes per topic. And then if we have any Q&A, we can take it towards the end, depending on how the session goes on. So to start with, let me hand it over to Nate to give a quick intro about you and your company, and followed by Grant and Gordon and Deep.
Sure. Excuse me. Hi, everyone. I'm Nate Clancy. I'm Vice President of Business Development at FTX US. And FTX US is, I guess, the sister company to FTX.com, but it's a US company. It's spot market only. And my responsibilities at FTX include overseeing the West Coast sports and entertainment partnerships, so like Golden State Warriors and esports partnerships we have with TSM and Riot Games down in LA. But then the majority of my time is spent just trying to get big traders, liquidity providers onboarded and using our core product, which is the US spot exchange. So yeah, institutional sales and BD, and yeah, I've been at FTX since probably around like 9 months, which is just about half of FTX US's existence. So exciting times.
Gordon?
Greetings, everyone. I'm Gordon Grant. I'm Vice President of Derivatives Quantitative Research and Trading at Genesis in New York. Genesis is part of the Digital Currency Group. We are one of the largest institutional broker-dealers and market makers in cryptocurrency, spot, and derivatives. So, of course, we have some intersection with FTX. I think this is a landscape that's well occupied by them, and have the utmost respect for what they do and their products and services. My chief responsibilities are, as would be expected, a quantitative approach to understanding the cryptocurrency derivatives markets and adding value for our clients and institutional partners in their participation within the space, and particularly when it comes to non-linear, that is non-Delta One products, specifically options, and then supporting our global head of derivatives, Josh Lim, who couldn't be here today, as well as my colleagues in trading and managing risk for, again, one of the largest books of OTC as well as block traded exchange cryptocurrency derivatives. We have offices around the world, and we trade on a 24/7 book. So looking forward to talking about some of the key topics today and how we see this through our lens.
Thanks, Gordon. Deep?
Yeah, hello, everyone. I'm Deep Majumdar. I'm the CEO of Alpha Trend. We are an early stage startup, and we provide actionable insights to retail investors to help them maximize their returns on crypto and NFT trading.
Then thanks, Steve. So Nathan, let's start with a quick overview about the digital assets, the trading cryptocurrencies and crypto derivatives. So crypto exchange, FTX is built by traders for the traders. Given that we have varying levels of knowledge in this space in the audience, let's start off by discussing what are these assets? What are these assets? Where can we find them? How can people buy and sell, trade them? Especially what is your advice for beginners to start with?
Sure. So on FTX US, we have a more conservative approach to what we list. So we pretty much just list the top digital assets out there. So like Bitcoin, Ethereum, Solana, like the blue chips. On .com, or due to different regulatory frameworks, we're able to list a lot more. But yeah, all of these are digital assets or digital currencies. Our infrastructure, our software is more or less a matching engine, very similar to what you'd see at like, NASDAQ or other exchanges. And we take pride in providing a fair and transparent, I guess, field of play for traders to engage with. And I think that's one of the reasons why we've grown so much and attracted such liquidity, is that, yeah, we take a lot of pride in having a very clean API, an easy way to enter and participate. And I guess your other question was, what's advice to beginners? Yeah, I'd say just try to immerse yourself as you're getting into it. And yeah, it's going to be a process, and there's definitely a spectrum. But yeah, you got to start somewhere. Oh, I think you're on mute.
Okay, is that better? Yeah, okay. So Gordon, so your views on the evolution of the crypto derivatives market, innovations development happening here, what are your views on it? And how does one get started in this environment?
Sure. Well, I guess with a little bit of historical perspective, when I first bought Bitcoin in 2013, personally, just by random chance, I met someone. I mean, it was a cottage industry where you paid people with, a Western Union transfer, and you had a peer-to-peer wallet, and now, of course, you have all these wonderful facilities like FTX. So getting started today means something very different than what it used to. Genesis is a platform that serves high net worth individuals along with institutional entities and investors. So we're not, retail per se, but I think, as Nate has said, right, it's really about familiarization with the ecosystem, and I think probably understanding what to do, what can be done within crypto is as much about knowing what should not be done, right? And that means, there are platforms that offer excess leverage to what I believe may be considered excess leverage to retail participants. They can expose them to, to risks of liquidation and adverse volatility, which they may not be aware if they're coming from a foreign exchange trading background or an equities trading background. I think even some of the moves we've seen in the marketplace in the past week, and names like Ethereum Classic or Cardano, have really demonstrated the capacity of the instruments that are traded within this space to be highly nonlinear in terms of the distribution of their returns, even over a short time horizon. So I think understanding the distributional characteristics of the asset class that you are trading, whether you are a retail participant or an institutional participant, is really quite important here to avoid accidents and also to be able to extract the value that does exist in these markets. Thanks to platforms like FTX, there actually is an ability, depending on what country you live in, for retail traders to do interesting things, trading perpetual futures versus dated quarterly futures, or trading options and dynamically delta hedging them. So really there is a lot of power in the hands of retail participants. We see that even in some of the spaces that we transact in. The emergence of the so-called decentralized options vaults and the protocols that allow retail crypto holders to lock value and, essentially within a pool and sell options against it in order to generate yield is really a powerful tool that I think is sensibly allowing, small scale participation in order to generate, probably a reasonable risk adjusted rate of return for getting into that they otherwise could not do. So knowing that these things exist, how to utilize them, and understanding what the risks are involved, I think is quite important. And probably the technology will continue to, to enhance, right? These are just the first among some of the decentralized tools that are being made available. The depth and liquidity that are on these decentralized exchanges continues to grow thanks to a significant amount of investment and really what amounts to customer subsidization, by investors who want to keep people into the space. Crypto, for the amount of volatility that there is actually pretty tightly priced and pretty liquid. And so I think that's probably the other great thing for new participants to know is that this is not like trading nickel on the London Metal Exchange, right? This feels a lot like trading foreign exchange or equities, with significantly higher degrees of volatility and perhaps a bit wider bid-offer spreads.
Okay, thanks. So Deep, how is Alpha Trend thinking about how these early stage retail traders are thinking about trading cryptocurrencies, and what are your thoughts about those?
Yeah, Vignesh, I want to piggyback right on what Nate and Gordon said. It's it's not about taking a lot of risk here. It's actually how do you mitigate that risk when you try to trade. The first thing is we are trying to encourage folks on trading crypto. That's where we begin, and we think about a lot of these early stage investors. What they do is they would hear something from their friends, from their network and social media, and they might feel a little FOMO'd out, and they will start putting money into a trade. But that's like taking a lot of risk into something without knowing. And that's why we are here. Well, what happens is there's this other population, who are still early stage traders, but they want to, they're little risk averse folks, and they want to do some little extra research on whatever they're getting into. And the way they do it is they try to observe the team behind the coin, and what's the hype around, what they're hearing from influencers, celebrities, and backers, and and at times even the utilities of those coins, if there are any. And they also try to find how other top influencers are reacting towards the coin. That's what we see in these early stage retail traders coming into the marketplace, and trying to do something on their own. But there's a lot of noise, it's out there. And what we are doing at Alpha Trend is we kind of try to mitigate this risk of just not foaming out and jumping into it by condensing this journey, by picking this insights from the market and bringing it in front of these traders in a way that is quantified, timely, and actionable at the end. So that's our goal. That's what we do, and we try to do it in a very simple and effective way that is that can help them maximize on their returns. But de-risking is one of the key things that we try to do here. You're on mute, Vignesh.
So Nate, FTX trades both the NFTs and the cryptos, and also what's the first word that comes into mind when that you get when people say cryptocurrencies and NFT, and how is the smart investing changing? So how can you give your views on that?
And how is the what investing changing? Sorry.
The smart investing, on how is the smart investment changing, and how do you see the data stand up?
Yeah, I guess the one word that comes to mind for me is innovation. And the reason why I say that is because I think a lot of NFTs, even cryptocurrency, and what's commanded the discourse thus far, things like Dogecoin or Shiba Inu coin, I think they're going to be ultimately, like footnotes on the bigger story. And what we're really looking at is a way of like truly innovating the financial system. And we're kind of this like a high finance product and movement that still has like the Dogecoin reputation a little bit. So I'd say innovation, especially on the NFT side. Right now, it's just, people make fun of it a lot, and it's just, pictures of apes and things like that. But we're starting to see a lot more utility added to them, a lot more, things to generate a robust secondary market. One example that comes to mind is our Coachella lifetime pass NFTs that we just dropped. So in theory, like 5 or 6 years from now, you can trade this very valuable asset, one person to the next, with no middleman and just the marketplace fees. So yeah, I'd say innovation is the word I would pick. And on the other side, the smart investing, I'm constantly humbled by the ingenuity of what you see out there, especially with some of the algo traders and quant traders. A lot of them are these, black box traders, and it's almost a taboo to touch or mess with or question the black box, even if you don't fully understand it. And during times of incredible volatility and risk, and when there's a lot running on it. So it's pretty incredible, like machine learning and how far we've come from even 10, 15 years ago. And yeah, it's something that I had never really like witnessed before working at FTX, but yeah, to think that there's completely automated trading, it's pretty wild to think about.
So, Gordon, what data do you see stand out as a strong indicator in the market when it comes to assessing some of these crypto values?
I think probably I would look at, something like convergence or dispersion in the returns of heterogeneous assets, right? So we tend to understand that people are kind of making decisions about underlying asset characteristics in a thoughtful way if there's greater dispersion, for the reason being that all your correlations are not simply functioning at one, which is often the case, particularly in crypto, when markets are sliding lower, such as we've seen this year, or certainly during the kind of crypto winter in 2018, or even in the spring into the summer, right? So that for me is a very good gauge to understand the extent to which there's, maybe we don't say smart, but let's say more thoughtful approach to assessing what is going on. And there are often, as Nate has said, right, there are memes and meme tokens. There are even memes of how people think about, about particular, let's say alternative layer one, such as, Luna or AVAX or Solana. And at some point, right, people picked up this name, Solunavax. And it's quite funny that at the time of the Barcelona conference, these tokens all converged to effectively the same nominal price, right? In the sense of it doesn't matter which one you trade, they're all at the same number, plus or minus $90 a token. But I think that, when you start to see return characteristics over various time intervals that are really completely different and demonstrating that separate factors are at work, this is really quite encouraging for the asset class and sort of suggests more that people are trying to take an approach of understanding in the way that they would with stocks or commodities or whatever the case may be, and are not simply kind of punting wildly with whatever leverage is available on any given token. That all being said, I would generally expect correlations to remain high within certain subsectors. So your DEX tokens, or your L1s, or your, let's say, privacy coins, which is a new sort of theme, or let's say a resurrected theme post the events in Ukraine and Russia. Those kind of correlations intersector are going to remain high, but there may remain some dispersion between them, right? So if you kind of look at the performance of these and say, all right, which ones have done better or worse after certain macro catalysts or idiosyncratic catalysts within the sector, are we still seeing that kind of old, adherence to a one-type correlation, or are we really seeing these things behaving more idiosyncratically with dispersion? And then I think we can also speak to the extent to which these are decoupling from other macro assets, right? So because most traders who are coming into crypto didn't start trading this as their only asset class, people are always looking for signposts, right? Is Bitcoin correlated to gold? Is Bitcoin correlated to equities, to interest rates, right? To crude oil, whatever the case may be. And I think for some people, right, the extent to which those are decoupling, those correlations are not sitting fixed and high, also offers some opportunities. And that's precisely what these kind of black boxes and not so black boxes, right? More discretionary type, longer term, maybe even trend following models that exist in these markets might be looking at, whether those are ones that Nate has mentioned or not. So I think these are all signs of, I won't say health of the market, but there are folks who say, all right, well, if tokens like SHIB or Dogecoin are sort of mooning again, well, this is sort of a bearish sign for the market because people are really not paying attention to what's going on. I don't necessarily think that's the case. I just think that we want to have an eye towards innovation, right? Clearly, and the extent to which the developments in these markets are being reflected in the asset prices themselves, the market capitalization, and what you can do with the assets, right? We should not forget, unlike a stock, where you just simply hold it, it pays you a dividend, and maybe you can sell some derivatives against it. These are actually all powerful tools, right? There are governance tokens, there are utility tokens, there are stakeable assets, there are tokens that are derived from proof of work processes. So the heterogeneity of the underlying asset classes and the subsectors within it is really rich here, and therefore I think it sort of fundamentally demands that kind of dispersion that I would say I hope to look for. And to the extent to which that is occurring really informs what kind of trading regime we're in. And it's something that everyone should pay attention to as they look at this, whether they're pundits, journalists, traders at an institutional level, or traders who are just entering the space.
Right. So, anything that you feel that is currently missing from existing data toolkits that would allow traders to build an edge in the market? You can start with you and then kind of pass it across to Nate and Deep as well.
Sure. Well, I wouldn't say lacking, but I think an area that's certainly, hot and coming along are DeFi dashboard, analytical tools, right? So, clearly there are sort of on-chain analytics like Glassnode and others, and of course now there are increasingly derivatives analytical packages, whether it's your skew.com, which was acquired by Coinbase, whether it's GVol, which is no affiliation to Genesis Volatility, but which is an excellent, no affiliation to Genesis, but which is called Genesis Volatility. It's an excellent product, right? And they map all the volatility surfaces and give you historical time series and have a, API that you can query with, with Python and the like. That is now starting to be available for DeFi as well, right? And this is quite exciting because DeFi is inherently an even richer space, right? So you're taking a look at things like, the impermanent loss that is existing on the protocols and the volumes traded and the total value locked and, sort of the APYs and are these sort of, as a function of dilution of the tokens and all the other kinds of things that's going on, values that are staked, that are being removed from the exchange and people are sort of measuring the transactions on whatever, maybe Etherscan or others. So there, these kinds of sets of information are really quite relevant for not just the performance of the tokens, but really what's going on in these markets too. And so I think the ability to access that, at, let's say, less pricey or less analytically intensive tiers for newer participants is really going to be key, I think, as we kind of push the boundaries and start getting into getting into the new types of products and services that will exist within the crypto ecosystem thanks to decentralization.
So Nate, any data toolkits that allow
I would add on to that the infrastructure just isn't there yet because the industry at large is pretty mature. So the more sophisticated actors and the more motivated and very crypto specific companies, they'll find the data and they're starting to build it out. But yeah, as Gordon mentioned, the price point, the accessibility, it just isn't there yet. And when you think about comparing it to something like traditional finance, where there's turnkey asset management platforms, tons of robust competition amongst like trading execution, different analytical platforms, that just isn't there yet right now at crypto. So I think, yeah, it's getting there, but just like payments infrastructure, a lot of these things, it just doesn't happen overnight. And it's something that by nature is more of a grassroots type of like groundswell of demand versus anything that we can sort of push out from the top down. So it'll get there. But yeah, I think that's a big gap in the market right now and something that's preventing like an exchange like us from reaching a lot of demand that's really close to the bottom of the funnel, but just not quite there yet, not ready to take that risk.
Over to you, Deep. Your views on your smart investing and how data matters.
Yeah. So I just want to piggyback right on that again with Nate on this thing where he talks about accessibility and also the pricing of tools. There's one more component to it, and it is whether these tools are provided in a way that is there's some actionable things that retail users can do with this. At the end of the day, like, we provide users with these tools and they can't do anything with it. It just sits out there. So the key thing is not just with the pricing, but also a kind of a user experience along with those tools that someone can use it and understand what's going on and understand it in a way that's in their own terms, and they can then utilize it for their trades. Thanks,
Sandeep. So let's get a little bit within the landscape and how the asset expansions and its changing landscapes out. So Nathan, let's start with you. Can you touch on how we're thinking about the expansion of the exchanges to include NFTs? You can also, how do you manage these partnerships? Any particular types of businesses that FTX is looking for to grow rapidly with, and if somebody is looking to kind of provide some services around this crypto, what should the early stage companies be thinking about building around these?
Yeah, that's a good question. So NFTs, I think FTX does a really good job of responding to demand when we see it in the market, and it's because it's such a volatile, immature, like rapidly growing, that you really don't know what's going to happen and pop off when. And NFTs is a good example of that, where we saw all of the development community and DAOs getting involved during the summer, and then really scramble to create and bring to market our NFT platform. It was a very complementary fit for us because, like I said, we view ourselves as an exchange first and foremost, like the place to come and transact. So, we have the matching engine, we have all the KYC, fiat on-ramp, off-ramps. So it really was kind of like a lateral step into something that we thought was a big move. And that's been huge. I don't think anybody could have predicted the retail response or interest. And then as soon as retail was interested, all of the brands and all of our partners were looking to do them. So yeah, that's one of our big growth engines as a company, especially on the retail side and user acquisition. And we got a lot more partner NFTs coming out. We have some Golden State Warriors NFTs on the horizon. Tomorrowland, a big concert in Europe, just launched. I think we're doing some Mercedes F1 stuff in the future too. I would love to see this level of innovation across our whole suite of services too. I think payments is another one we'd love to see. I'd love to see NFTs as tickets or subscriptions. And yeah, I think it's the challenge in crypto right now, as we're going into this like steep part of the growth phase, is to not lose your identity and not overextend yourself too. Because yeah, I mean, there's competitors like Magic Eden or OpenSea who all they do is NFTs and don't have to worry about this 24/7, 365, black box traders who need support and those types of things. But yeah, I'd love to see that. I'd love to see, I mentioned payments. And more structured products on the US side too. I think that's a huge institutional demand, ways to hedge. On the international side, we have derivatives, move contracts, just different innovative financial products that for regulatory purposes we don't. But we do have a application to the CFTC right now that's open for comments. And we're hoping that sooner rather than later, we'll get the opportunity to bring derivatives or in particular futures to the US market.
So Deep, I understand your platform is going to include some of these frameworks to assess and evaluate the NFTs. So can you share some more on this, on what is it?
Yeah, absolutely. The space of NFT is kind of moving incredibly fast, and the existing tools are all approaching it from different angles, like OpenSea and whatnot. And we think about the space of NFTs in two ways. There is this premium stage where the NFTs are brought through the coin creators before they get into the exchange. And there's also this postman stage where NFTs reach various exchanges and they're traded, right? And technically, there also exists a stage in between. So, but most tools analyze collections with signals either on purely descriptive basis, such as the rarity within the collection, or on the postman stages through overall volumes in the market, for prices and whatnot. At Alpha Trend, what we believe that when the NFT gets to the secondary marketplace, the potential of profit reduces significantly. So a lot of our focus is on classifying signals during the premium stage. Now, without disclosing too much, what it means to us is looking at various aspects like social signals and social influences, community following, and the strengths, teams backing, etc. And we're also getting in that in-between stages I mentioned to analyze during the minting process if we can detect any major whale wallets coming in and how they're capturing the NFTs at that time.
How do you predict that?
Yeah, that's our internal algorithm. That's how we run our models. And we do look into various patterns, historical patterns, and we are also looking into how the in real time, how it's changing. And then we have our own data science models that runs against these transactions on the ledger that's happening. And we kind of read from that, and we are making our own models around that.
Okay, excellent. All right, got it. Let's so understand that your firm includes more services than just trading. So you have lending, custody, so on and so forth. So the evolution of crypto derivatives market, the innovations and the developments, the market structure, a lot of changes have come in through. So can you talk about Genesis and how you or your company thinks about this changing landscape? Uh, maybe in particular the regulations that involve this market and the institutions.
Sure. Well, look, I think there are a number of different regulatory considerations that affect the markets in which we transact. I mean, certainly, and it seems to be kind of each is its own threshold, right? Whether it be crypto derivatives that are permitted in the U.S. on exchanges like FTX or Deribet, there's going to remain purely offshore, or are there going to be ETFs that are approved that are spot-based ETFs and not futures-backed ETFs? Are we going to classify some of the important tokens, particularly the layer ones or sub layers or the layer ends as securities or not, right? And how is that going to be viewed in terms of the products and services that can be offered? I guess holistically, the most important thing really from our perspective is there is a set of considerations that apply to U.S. domiciled investors, and there are a set of considerations that apply to offshore investors. So those exist in two separate worlds, and you have to adhere to the regulations that apply to each of those. Genesis is a global business. We have global clients and we have global offices. So sitting in New York entails certain responsibilities, and sitting in Singapore, as some of my colleagues are, sitting in Europe, entails certain other responsibilities. So we obviously provide the products and services to the regions where they can be provided under applicable regulations, and that that's generally our approach. Clearly, from our perspective, and I think from FTX perspective, from Binance perspective, from anybody, right? It would be best not to have to think in terms of Binance, worldwide, and Binance US, and FTX worldwide, and FTX US, and Genesis. What can be done, vis-a-vis onshore clients, and what can be done vis-a-vis offshore clients, and from where. But this is a new industry. It wasn't that long ago, right, when we were still having the debate about, well, what is cryptocurrency from a legal perspective under the framework of the United States, under the framework of other jurisdictions, as to what it is and how we treat that. It's still an ongoing question of how certain kinds of derivatives transactions are treated from a tax perspective, right? And there's new information being, brought to this at the time. New opinions are being generated. There's a lot that's going on the legal side that is, tremendous work being done by some of America's and the globe's, foremost law firms. If you take a look at, let's say the top 10 or 20 law firms worldwide, many of them now have burgeoning cryptocurrency practices. They have attorneys who have only ever done this, right? And we've had instances where companies in the private sector are pushing this envelope, trying to figure out, okay, what can we actually do, right? The saga of Facebook and Libra, which became Diem, which became sold off now to Silvergate. This is all public information. And some of the splinter former employees of Facebook who are now starting their own. This is all showing, okay, people are trying to figure out what can be done, where it can be done. And from our perspective, right, we're a price maker in these markets, right? But generally, when it comes to regulations, we're a taker, right? And clearly, I think again, to the credit of institutions like FTX, for whom we have a tremendous degree of respect, they are probably, from what I again read in the press, spending more time engaging with the regulatory apparatus in order to make their interests known and move forward with things that they wish to see happen. Genesis, we're really simply, as we say, we're buying and selling what we can buy and sell in markets where we're able to do that. But of course, right, we have a very robust compliance, regulatory, and legal team that pays close attention to this in all the jurisdictions where we operate. And as and when new products and services are able to be offered, we're certainly the first or among the first to do it. And being in the U.S. market, obviously that puts us quite actively engaged with the CME. I think Genesis is on the record as having been the first to trade BTIC futures on the CME, micro ETH futures on the CME, and other kinds of products like that. When it comes out, when it's able to be traded, we obviously try to take that initiative to be in the new marketplace that the regulations have allowed. I guess that's a summary of how we think about it, and I think how many others within the space are approaching it as well.
Thanks.
And I was just going to add one thing. The pace of change in crypto is so incredibly fast And when you're in the industry, you sort of take it for granted. But we even talked about things like accessibility issues with retail, and the reality is that outside of crypto, it just doesn't move that fast. And I think that's sometimes lost, and you know, it could be easy to be cynical about these things, but at the end of the day, there's been a lot of encouraging signs, and ultimately what nobody wants to do is, you know, get out over your skis and create something that ultimately disrupts the whole industry or disrupts the way people do business. And, you know, unfortunately, the law just doesn't move as fast as crypto, and probably for the good of society as well. So yeah, as Gordon said, at FTX, we take a lot of pride in engaging and trying to advocate and you know, put forth our view of what we think the solution could be and what benefits we can draw from it. But yeah, it just takes time, but I think we'll get there. I'm very optimistic.
Over to you, Deep. So what do you think about crypto regulations and how is Alpha Trend planning to navigate it?
Yeah, for us, you know, it's what's good for our investors, like using our tools to make their trading decisions, right? The way I think about it, about regulations is, you know, for investors to be aware of it before it hits them like a moving train. Like you have to get out of the way, you know, make your trade move out of the way. But regulations are actually good for them in the long run. It's just in the short run, if they're not aware something is coming very fast towards them, and then they don't and it hits them, they have this a knee-jerk reaction, and the market takes a hit. So that is one of the biggest problems. So what we're doing in the platform, Vignesh, is we are adding something called a Fed monitor. So we are keeping our investors kind of aware that something is going to happen. There's all these conversations going on, and so they're more aware. But as you know, as an individual, like as an investor myself, like I would think, like, you know, it's very healthy in the long run, you know. And there is also at this moment, there's little to no prediction for investors right now. So there has to be something out there that provides some sort of prediction. So that's how we feel about this. And it has to feel like a safe ecosystem for everyone. That's how we take this. And what we do is anything we hear from the market, we kind of put it out there. Like, hey, there's some regulations coming. We also have, by the way, you know, various advisors on board in our team who are sitting on these different boards of different you know, regulatory boards, and they keep us updated on what's going on and, you know, on what might come. So we kind of have some good fair idea what's going to happen.
Got it. Thanks, Tim. So if anybody in the audience has any questions, they can post it in the Q&A as well, so we can kind of, you know, talk through some of these things out as time goes on. So in no particular order of Nate, Gordon, or Dave, where do you see the future of cryptocurrency and this NFT market going? What do you see in the next 2 years? So they kind of mentioned the short term, long term out. So where do you see this? What do you see is the future?
I'll give it a go here to start. I think, you know, look, and NFT really, I guess it's always good to tell people what it actually means. We should never assume too much knowledge on the part of our audience. So NFT literally means non-fungible token. So yes, you know, JPEGs on a blockchain, or let's say the JPEGs in an address that is referred to by a ledger entry on a blockchain is quite novel, right? And of course, it's a product that can be sold. And a product that the consumer appears to be embracing to varying degrees of passion and enthusiasm and you know, value attribution. But it has many use cases that are not yet foreseen, right? We haven't even begun to talk about how NFTs may be used and the associated kind of blockchain protocols to handle solutions such as real-world trade, banking and financial, right, and payments and other kinds of things, or just other assets, right? Other assets that can stand to be tokenized in this way, right, using the relevant protocols, and you know, simply monitored and tracked, whether it be a fungible token, which is what, you know, regular tokens are, or non-fungible tokens. So when we talk about what do we expect by way of the future, I think we can really expect the amount of capital being deployed in this space. I don't think there are reasons to believe a priori that it should decline precipitously, right? Because this is a space for innovation. where the prospect of returns, if not always the returns, but the prospect of returns for fresh investors remains high in the eyes of those who are doing the investment. And therefore, this kind of capital allocation drives the prospect for innovation, which Nate has mentioned, right? So it may well be in the future, right? You can think of limitless possibilities, right? Is there any reason why, for instance, we could not have a replacement for the IMF's strategic drawing rights on a blockchain, right? Could we have that? Sure. We could have SDRs turned into a token, right? We could have, of course, all of these CBDC projects, central bank digital currency projects that are being talked about now out there, right? And competing actively with, sort of a sovereign, cryptocurrencies like Bitcoin and others. We can have, anything from real objects of art being destroyed and turned into NFTs and put on a blockchain, right? Or perhaps we will have the entire collections of art museums and so forth being turned into NFTs, or we will have art museums simply being replaced, right? The Picassos and the Van Goghs will be replaced with, things being cooked up in Yoga Labs and what was formerly Larva Labs and Beeples and Fidenza and so forth. So it's very early days still, right? And we do know that capitalism has an ability to, or let's just say pursuit of profit, not to use isms, pursuit of profit has an ability to generate ideas which are yet not foreseen, right? So clearly this nexus of finance, consumerism, right, or consumer activity and payments is going to yield some very clever solutions, right? And so it has that amazing potential to think, okay, this crypto at once is a space and has platforms in which you can be exchanging and trading value and price discovery, which is what we're doing at Genesis when we're trading options or making loans or borrowing or lending, collateralizing things and figuring out the price of something in the future versus today and so forth. But it also has the ability to sell something, right? And as has been said, right, structured products, that's a product, right? That is going to be increasingly rolled out in this space. But it's also, right, through NFTs, these are actually consumable products, as Nate has mentioned, right? These passes to Coachella, these there are now sort of NFTs that are being associated with, digital renderings of shoes that you must acquire in order to walk in the real world to earn rewards for doing simple acts that you do day to day, right? So there's really no limit here. It's only what are people willing to adopt. To what extent are they willing to place confidence in some kind of disintermediated system, right? And we're all participants in that now, right? We at Genesis participate in these decentralized option vaults, participate in decentralized protocols. There is no counterparty for that, like a CME, right, or an FTX, right? This is kind of the cutting edge, and we're all starting to think how we get comfortable and manage the risk around that and the extent to which this offers value. The consumer will make that choice. The retail trading participant will make that choice. Institutions, non-governmental or governmental, multilateral, private and public will start to make that choice. So I think that's where the mind goes in terms of what can happen, not just what we're sitting here buying and selling today in billions of dollars of volume, by the hour.
So we had a couple of questions that has popped up, so I'll kind of put it up, both from my good friends Callan and Rona. Hi, Callan and Rona. So the first question is, does the crypto market represent the KYC challenges? Is customer identification an issue? Because with all the STN that is coming up now with the OFAC that is kind of putting up restrictions with the Ukraine, that's a good question. So what is, anybody can take the...
Yeah, I could jump in coming from a centralized exchange. I'd say it's a huge challenge for us as a business development team. It could be very onerous, especially for more complicated like company structures and those types of things. It's ultimately the cost of compliance, though, and something that you have to deal with, and it goes a long way in terms of preventing nefarious actions. And we've seen, even with the political unrest now, the ability to quarantine or deactivate or freeze certain wallets and accounts and really have more visibility into it. It's been very valuable. Yeah, I think the funny thing about FTX is for all the bells and whistles, I genuinely think one of our biggest competitive differentiators is our KYC process and onboarding process, because making that quick and easy and getting them through that and ready to trade is so critical in the onboarding process, because at this point there's a lot of momentum and the market's so volatile where, if somebody doesn't turn their bot off before the market turns, they could be, scared off from trading for a few months. So yeah, it's a challenge. But again, like the cost of compliance, and I think at this point, that's one of our feathers in our cap, and we've devoted a lot into it, and we're finally seeing some of the benefits of those investments.
I think you can do your initial onboarding in like 3 minutes or something. That's what your website says, right? So that you could onboard it in 3 minutes.
Or was that wasn't for FTX, right?
Yeah, FTX in your website, it says that you can onboard.
Oh, okay. Oh, yeah, the retail app. Yeah, so the retail app is a much less involved KYC process. So, and yeah, we've seen that. So a good example of why I think that the KYC process is such a valuable tool. We've been able to do NFT drops through the Golden State Warriors, through Miami Heat, FTX Arena, and we'll do upwards of 3,000 brand new accounts in one night in the series of a few hours. And yeah, I think the KYC process for individuals is much easier, but that's mainly because a lot of them are using their phone and they're not trying to, they don't have to deal with all different ownership structures and multiple people having, X share of owner in the organization. They can sort of just take the selfie, find some way to verify their address and move on. But yeah, I think now at this point, on the retail side, say like 2/3, probably over 2/3 get automatically verified instantly. And then the rest, it should be a pretty painless selfie process. So it's come a long way, let me tell you.
In no particular order, anyone can share thoughts on the initial DEX offerings, especially in the form of fundraising for startups. And also I would extend it out. Any startup ideas that you would say that, hey, this is something that if I have could be a potential idea for our both alums to pick it up and drive. That will be useful too. So the first question is using the initial DEX offerings as a form of fundraising for startups.
I would say as a broad comment and not particularly categorical, to the extent that this continues to be a regulatorily approved process, and I think there's always reasons why regulations can change, but assuming that it continues to be accepted and people are doing things by the book, it's an innovative way, right, to get liquidity and to be able to deploy it. So to that extent, right, clearly, while liquidity remains ample in capital markets, and there are signs that notwithstanding the incipient tightening of Fed policy and withdrawal of accommodation in many senses, it's still it's still a very liquid market, and there are great ideas that deserve capital or that people feel deserve capital, and so this is a useful way to do it. I do think that people are continually reassessing, much in the way that they have in the past, right? ICOs were hot, and there was broad-based participation in ICOs, and then sort of after the winter, or let's say the start of the winter, people started to say, okay, what is it that I actually bought, right? What is it that this thing does? What do I have a claim on? And as people sift through, various kinds of tokens and these IDOs, they really want to know what they have. And I do think people are perhaps quite a bit more prudent now than they've been in the past. IDOs that offer long-term value, I think, are going to sit much better with an investor base. And clearly there are IDOs that would do that, and others that would be more opportunistic, let's say. So, it remains a marketplace that is new and different and requires a watchful eye as far as, what kinds of things are going to garner attention. Well, the market clearly, in terms of its valuations, is telling you right now that anything relates to, the buying and selling of cryptocurrencies or crypto assets, be it trading itself, like FTX. We all know what FTX's valuations have been at each successive round, or quote unquote smaller exchanges like FalconX that are out there, to custodial services like NYDIG, right? We all see these numbers, right? And these numbers are quite extraordinary. But equally extraordinary are the valuations that are attached to decentralized derivative exchanges, right? The valuations that are attached in private markets to liquidity aggregators, right? That are attached to block trading platforms, and then going down further from there, that are attached to analytics, that are attached to pricing solutions. But it's all focused on the business of the buying and selling of the asset, or the analyzing of the process of buying and selling, and ensuring that there is greater security about it. I think in the vein of KYC, AML, sanctions, and so forth, the continued watchful eye of compliance and legal personnel and regulators within this industry in that specific context will mean that businesses that offer this service are likely going to do very well, right? And it's that's certainly a growth area, right? Because the landscape is shifting all the time, and let's say a month ago there were a number of entities within the Russian Federation that were not under OFAC regulations, they're not subject to OFAC restrictions, and now they are, right? So the services that account for that and provide people the information that they need that's relevant for the regulatory jurisdiction probably also going to do well. But I think there are still so many areas, right, that can be invested in, of course, which relate to payments, which relate to real world use cases, which relate to financing, right? These are incremental problems that are going to be solved likely using blockchain technology and decentralized exchanges and all the aforementioned tools. So you start from this kernel and you kind of build out into what is possible. So I think that even things like carbon emissions, right? We've seen some very innovative attempts to solve real world pressing societal needs through blockchain. Not all of them have worked, right? Some of these proposed solutions that have happened on the blockchain have seen their value drop by 99%. And some of them have done better, and they're attracting continued investment capital from corporations. The answers have not all been written, but I think the extent to which one is using this technology to solve a problem that is broadly agreed, needs to be addressed, and particularly one that is insightful, perhaps will garner outsized returns, right? Of course, there's no reason that FTX valuation cannot continue to accrete in the way that it has, which has been rather geometric. But there are certainly reasons to believe that there may be yet again more geometric gains for investment in projects that relate to problems that haven't yet been solved. And I think most people within the crypto space would say FTX has solved for crypto trading, right? That happens now in a pretty amazing way, right? And for a wide range of products, as have these other exchanges. But have we solved for these other kinds of things? So that's kind of where the mind goes, and I think where investment capital will pursue it, and perhaps where the greatest returns may be generated.
Any take on Nate on the initial DEX offering?
I'd say less on the IDO, but more in terms of like what startups are needed. I think there's just so many less sexy than like a new flashy DeFi protocol. But I think I mentioned earlier, like turnkey asset management platforms, different analytical tools, custody is always a big thing. Things like that, payroll applications so that people can start getting paid in crypto, crypto retirement accounts, and the custodians and infrastructure to set up a crypto IRA, for example. And there's some activity there, but you just need more competition, more entrants, more entrepreneurs to really make it better and tighten the fees. And I think that's FTX is a perfect example where there's tons of these great exchanges where we've grown a lot in the 3 years as a company, but we still feel like we're chasing Coinbase and Binance big time, and we really are. So yeah, there's no shortage of opportunity, and there's a lot of these like mid-market downstream that you're not shooting for the moon, but they could fill massive gaps in demand. So yeah, go out there.
Go ahead.
I know that it all boils down to for any new new project that comes to the market is what value it brings to the table, right? So whether it's IDO or not, at the end of the thing is, are we bringing any value to the customers? And that's how we at AlphaTrend look at it. Like right now, we are an analytical tool, and we are getting tractions from the fundraising side, and also we are growing in the customer base as we acquire more and more users. But the point is, whichever route you take, whether it's the tokenized route or the traditional route, you do have to bring this value to the customer, and you need to show in the long run that that's how it's growing and it's working, and that's how we think about it.
So we are almost getting at the top of the hour. So any final advice on investment in crypto and NFT from each one of you?
Come and use our tool in Alpha Trend. It's not expensive at all, and it gives a lot of insights. And just check it out, and it's also free for some time too.
Gordon, any final thoughts on and advice on investment in crypto and NFT?
Well, I think I would say determine the reason for which you are participating in this space, right? If it's pure speculation, and there are any number of reasons why it might be pure speculation, then decide if crypto really is the best place that you want to speculate. Of course, there are any number of platforms for that. If it's not for pure speculation, but really, let's say, for more kind of what we would think of as informed investment, then really answer your question is, what is your thesis about this, right? Because that can help a great deal in paring down what you want to do. Is your thesis simply to be that this is a high volatility asset class that offers a reasonable risk-adjusted rate of return for participation in various ways, whether it be yield accretion through through the sale of volatility or forward contracts, or participating in AMM protocols whereby you're harvesting some kind of automated market maker yield, or simply being that you think that the Bitcoin is the solution to the ills of centralized finance, which is a thesis that is being talked about now in the context of the challenges that the global economy is facing. Find out what your thesis is, right, and have that conversation, so that, like in anything else, right, a wealth advisor or a financial advisor would ask someone, what are you hoping to achieve, right, and what is your outlook? I think crypto, demands that, but with even greater precision, because it's an amazingly deep sea, right? You get into it and you start in the shallows and then the coral reefs, and before you know it, right, you're in the Marianas Trench, right? And you're going down, thousands of fathoms and encountering, the glow in the dark creatures with, the spines for teeth and, the lures hanging over their eyes, right? So it's, I think you kind of need to know what you want to do. Otherwise, it's easy to get lost, and that's the beauty of it. But I think that's also the opportunity, and that's why it will remain such a rich opportunity set. And notwithstanding, recent pronouncements about traditional financial institutions getting involved in crypto, of course, anybody who is more crypto native welcomes that. And I think one should not be, intimidated or saying that this will sort of, mark the death knell of innovation. It's just simply this asset class, I believe, can absorb it, right? There's so much to be done here. So you need to know what you're doing before you wade in.
Yeah, and the only thing I would add is that very similar to the other messages, but crypto is very empowering, and no barriers to entry. And I think FTX, one of our guiding principles too, is no upfront fees, no account minimums, only trading fees as you use the product. Especially the same with our order book data, completely free to pull down, no redistribution licenses, no collateral required to pull down any data. So we're really an open book, but it's, as empowering as it is, it's also very accountable. And so, yeah, always stay humble, especially when dealing with things like auto liquidation and margin, and it's a different framework. But that being said, and just like the final message is that my experience has been, it's been the most supportive and collaborative community I've ever been a part of. And you really just have to again, like, humble yourself and be keen to learn and ask questions and not pretend like you know everything, and be willing to listen to others. But it's been incredible, the warm welcome I've given, and I feel like I want to just pay it forward now. So yeah, I would say go out there, and yeah, Twitter is an incredible resource to learn everything that you possibly can about crypto. So
yeah, so before we kind of close out with the thanks, but just we'll have a picture of everyone. So just Gordon, your head is kind of cutting off too. So I'll just take a quick picture. Okay, thank you guys. So thanks everyone, and thank you. Thanks also the Chicago Booth alumni Vivian from which has been staying late on a Friday evening for enabling this session to us. Special thanks to our speakers Nathan, Gordon, and Dip for sharing their knowledge and helping us explore some of these interesting topics of